Mark, good to see you. Today, we're going to talk through 5 steps for tax-free Roth IRA distributions. The benefit of funding a Roth IRA is the availability of tax-free distributions in the future, but the rules can be complicated, so let's break it down. First, you need to follow the ordering rules. What do we need to know?
Well, yeah, what's interesting, Aaron, is, everybody's talking about doing Roth conversions
Right.
or making contributions to Roth. But hey, at some point, we want to get to the money. We want to go spend it. So, yeah, we have to follow these ordering rules. And this is sometimes called the aggregation rule. So, what happens is funds will leave your Roth IRA in a certain order.
Mhm.
The contributed amounts are going to be distributed first. And then converted amounts, if we have any of those, they come out next. And then ultimately, what comes out last would be the earnings.
Mhm. All right. And then second here, your contributions, they're always available, tax and penalty free.
Yeah, so we have to make the distinction, definitely. Contributions. So what I put in is going to be tax-free. It's going to be available to me, even if I'm not 59 and a half,
Mhm.
because see, I've already paid the taxes on that. Now, if I'm 55 and I wanted to get to my earnings, I couldn't do that in my Roth IRA because that is still under that rule that, hey, if you're not 59 and a half, you're gonna have the tax penalty. But my contributions are definitely available to me without penalty.
Hmm. And then that brings us to number 3 here. Watch out for the 10% penalty on converted funds. Converted funds are always distributed tax free, but that doesn't mean you can tap the money before 59 and a half without a penalty.
Yeah, and that's absolutely correct. So we have to remember, see, we just talked about contributions, but this is now a conversion.
Right.
So again, back to my example, if I'm 55, I do a $100,000 Roth conversion. All of that conversion, that $100,000 would be subject to a tax penalty if I take it out prior to 59 and a half. So we have to remember that that's a critical rule, and we're not going to have that kind of liquidity that we thought we might want to have. We're not going to have it until we attain that age of 59 and a half.
Hmm. Hmm. All right. Next, know when earnings are tax free. We do have to meet a few requirements for the earnings to be tax free. What are they?
Yeah, so in order to meet the earning, or in order to have those earnings be tax free to us, we've got to meet the 5-year clock. We'll talk
Hmm.
about that in a little bit. Obviously, we're going to have to attain the age of 59 and a half. And then the other two places would be if we have a disability or we have a death.
Okay. And I'm glad you brought up the 5-year clock because understanding the 5-year clock for qualified distributions of earnings is really important and it can be very confusing. What do we need to know?
So here's the thing. A lot of people think that if I do a Roth conversion, I have to set up multiple Roth accounts. But actually, no, you don't. What we need to do is, if we don't have a Roth, I'm going to encourage all of you to set one up, even if you don't meet the income limitation. So let's say in 2020, I put in $1. I've established my Roth, but then 3 years later, I do a $100,000 Roth conversion. Now, some people would think on that conversion, I've got to wait 5 years. But no, because you started the Roth in 2020, all of that money is going to be available to you 5 years later. So in my example, that would be the year 2025.
Hmm. Right. And as you mentioned, a lot of people don't necessarily understand it. Glad we could clarify it. We also have a bonus tip for everyone. If you are younger than 59 and a half, make sure you pay the tax on conversions with outside after tax money to avoid a 10% early withdrawal penalty.
Yeah, I can see a lot of people don't realize that. And then they do that conversion and then they get hit and they go, wait a minute, how am I going to pay the taxes?
Right.
Well, not only how am I going to pay the taxes, I've seen people do that, but you're right, they get hit with that 10% tax penalty. They weren't expecting that. And here's the other thing, a lot of 401ks now, or some 401ks, I should say, are allowing you to do internal Roth conversions. And they're going to, and a lot of the rules are going to be you're going to have to pay those taxes with outside money. So
Right.
you really need to understand these rules before you make any of these decisions going forward.
I'm really glad we got to talk this through, Mark, because first when I, came across this, it's like, oh, Roth IRAs, of course, it's all easy, tax-free distributions, but the devil's in the details, as they say. So if somebody wants to talk more with you about distributions or conversions or just about being tax efficient, what's the best way to reach you?
Yeah, so they can just pick up the phone, give us a call. Anybody on our team would love to talk to you about this. Our phone number is 303-681-0113. Or if you want to, jump on the internet, go to our website, mcgregorwealth.com. There's some resources that you can look at. You can easily schedule an appointment with me. We have a calendar link that you can go to, and that way you can match up your calendar with mine and easily schedule that appointment.
Great. Mark, thank you.
All right. Thank you, Aaron. Have a great day.